Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
I want to thank Beetlejuice and Lydia Dietz for filling in yesterday.
Yes.
If you didn't see it, you can go look at the video. It's about what happens to your house when you die, how to prepare for dying, and all that stuff.
Right. So leave us a comment and let us know how they did.
Yeah, how did they do? We were out partying, so
Yes.
we weren't able. They had to fill in for us. Anyway, okay, what we're going to do now? We're going to do an update to the Las Vegas real estate market. We're just going to go over a bunch of the generic numbers, trends, but we do this every week. It's kind of our Monday video. It comes out every Monday we do it. We just got the data. It's brand new. We're going to start with this thing we call Market Action Index. As you can see here, it's a slight seller's advantage. It's still technically a seller's market. You're probably wondering on this chart, well, why isn't 50 and above sellers and 50 and below buyer's market? I have no idea. It's just 30 is what they've determined as a buyer's market. If you'd gone back and looked at like 2007, 8, 9, it would have probably been a buyer's market for a lot of that time. But what I think is really interesting is to see the trend. So this is Market Action Index here. If you look at this 2018, 2019, and really the beginning of 2020, we were kind of at 40, which is a normal market. Okay, and then you can see the two big bumps of 2021 and 2022, which were these super hot spring markets. That's only spring. You can see it always falls off in the fall. Even the fall of 21 was a pretty hot market. And then it cooled substantially last fall, December, the fall of 22, which we said would be the best time to buy a house. We called back in like the spring of 22, and we were literally right. That was the closest you could get to a buyer's market.
There you go.
Okay, and now it looks like it's trying to get back to 40. It's just kind of creeping along there at 43, but maybe dropping a little.
Right. So remember, we're just looking at Las Vegas. We're not looking at every little pocket within the whole metropolitan area. And we do this for a reason. That's the spot trends. If we were to cherry pick different areas, then all of this information would be worthless. So this is very useful for spotting trends. Yeah.
Let's jump over here to real-time market profile. This is like a weekly snapshot. And every one of these data points, this goes back about 3 months. So it looks like there's like 12 different points in here on each one. Median list price is basically going sideways. It has declined a little bit. Some of that is misleading because as more smaller homes come on the market, all median price of listing means is what is listed and what's the middle home. So if there's 2,000 homes listed, then whatever, they just start at the top and whatever the 1,000th one is the median. I had somebody actually comment because we did a video where the median was an exact number, like 560,000. And they go, oh, that's fake. That's a made up number. It can't exactly be a 560. Like exact, because that was the middle house. That was the list price of the middle house.
Right.
Halfway. It's not an average. It's a median. You may have to Google that to understand that. Median price new listings is different. This is the median price. Why is it new listings? What does this mean?
So new listings are new homes that have come on the market. So this is important because this tends to be forward-looking, right? This is what sellers would like to get for their home, and this is, I call it aspirational, right? Because this is what they would like to do. So this tends to be a leading indicator. So if homes come on the market for more money than homes that have sold, and that lets us know that the market is probably going up. If homes come on the market for less money than homes that have sold, that lets us know that sellers feel that they're going to be having a hard time selling. So they are starting at a place where they're trying to entice buyers.
And what Oana says is she's not comparing this to the median list price. She's comparing this to the previous median price of new listings. Median list price is always higher because higher end homes tend to stay on the market longer. So you have these lower end homes coming on and coming off quickly. And then the higher homes stay on longer. So that is always a higher number. But what she's talking about is this trend. And if you look at the trend, it shows the market just kind of moving sideways. You know, the median price of stuff coming on the market's basically, and that band's actually not very big. That's probably a $10,000 little band there, probably from 485 to 493 in there. Price per square foot, as you can see, it's basically hasn't budged. It's gone up a little bit from 3 months ago, but this is normally declines in this time of year.
Yeah, so, we're still in an environment of very little inventory and more buyers than we have inventory. Even though we're pushing up against the holidays, buyers are still interested in buying. And it's something that we see every year. We see a lot of closings, usually in December, as people are trying to tidy up their end of the year tax picture. So it's not unusual to kind of see a slowdown in September, October, and then having properties kind of pick up a little bit in the middle of November and closing at the end of December.
One thing that actually is pretty good is inventory starting to climb a little. I have a chart of this. It's going to be pretty fascinating to show you this. Actually, we do want inventory to be a little higher because the surprising thing is inventory is as low as it is, given the interest rates are 7.5% right now.
Right. So higher inventory would be good because that would give buyers more choice and it would make for a healthier market.
Okay. So speaking of inventory, let's talk about inventory first. The dot is today, every year ago. This locks in seasonality. You could see last year we had over 5,000 houses on the market. Now, you might think, oh, that was a ton in the normal market. Of course, the chart only goes back to 2018, but you see 2018, 2019, we had 5,000 houses on the market in Vegas, pretty much for like a whole year there. That's a totally normal market. When people thought, oh my gosh, because remember, we were told back in June of last year, there will be more homes on the market than ever. It'll be like the housing crash. It'll be more than the housing crash. Everyone would try to sell their house. There'd be nobody to buy them. It totally didn't happen. People just lived their lives and ignored the crashers. Just the 40 people that watch all their videos over and over were the ones that were making a big deal about it. But the inventory today is pretty low historically. If you look at the same day, all those dots. What's interesting is we're rivaling 2021 inventory, which was probably the hottest market ever in the history of Las Vegas real estate.
Right. But, I think it was hot in a lot of places. It wasn't just Vegas.
No, but I'm just saying that, we were listing homes back then that they would have 0 days on the market because we would put them in coming soon and get offers. And then the sellers would be like, I don't even want showings. I'll just take that offer that's $10,000 over list price cash and I'll be done with it.
Right.
And they literally, the first time that people walked in the house was the home inspection.
Mm-hmm. Yep, there was a lot of that.
Inventory normally, starts dropping off this time of year.
Right.
We're in that slow decline it's going to drop off until probably May or June. As you can see, it does every year, but it's still kind of climbing. Are we kind of in a weird cycle because of historical low inventory and interest rates, maybe, or kind of putting some weird pressures on the market?
Right. Well, you've got those two that are putting a little bit of different pressure on the market, but then you also have just the whole psychology of what's been happening the last few years. It's really been mind-bending in so many ways for people. So it is difficult for people to adjust to the current situation. I think it'll be a while before we get back to a traditional real estate cycle.
One thing I do want to do, I'm going to jump back this real-time market profile here and talk about rent. Somebody's I don't know who's getting the information, but I've had a couple people come in and post this fake information about rents. Their homes are just sitting on the market forever and yada, yada, yada. Median rents haven't changed in Vegas. We were the only city of 400 to have a negative rent increase, but that was from the spring of 2021 to the spring of 2022. But rents have stabilized, and the amount of days on the market, the median number of days on the market is 16. So half of all rentals are on the market over 16, half are under. But that's not like there's tons of rentals that nobody, and people have posted anecdotal information. Please don't put anecdotal information to use it as your basis of, well, there was this one house. Because Oana and I see these houses where we know what they rent for because we own rentals in the neighborhood, and we know that rentals in that neighborhood are $1,900, $2,000, and they'll have a house $2,350. Right. And we're just like, they're never going to rent it. And then a month later, it drops to $2,250, right? Mm-hmm. And people are like, oh, but Todd, there's this house down the street from me. It's been 3 months, nobody's rented it. Mm-hmm.
So there are a lot of reasons why homes don't rent. Obviously, price is one, condition is another. Just the people that they're attracting sometimes. And then again, goes back to price and condition. That may be another reason. It may have to do with their requirements. So maybe their requirements are such that people can't fit those requirements. So there are a lot of reasons why homes don't rent. And it's not that it's a bad rental market, but it may be particular to that landlord, to that home, to that neighborhood, to whatever's going on, unique in that particular situation.
This is price per square foot. This is unique on a lot of levels, and this is why. Everything, if you look at December 2021, and you can see the price per square foot was under 250, and we're at 260 now. Remember, interest rates were 3% or less. And if you go back to 2020 and 2019, 2018, interest rates were 3 to 4%. Okay, they were low threes for a lot of that time. Interest rates today are 7.5%. And look what prices are today. So this idea that the price is strictly a direct relationship between the interest rate and the payment of the house and nothing else matters. This chart 100% proves that false. It does, however, show an interesting thing. One, this hump. Mm-hmm. That was the hump where in 2022, interest rates were literally going up. Like lenders were calling people going, lock your 4.5% loan today. They'll be 6% in 2 months. And people were just like frantically trying to get any house they could, overbidding like crazy. They were super not price sensitive, strictly because they knew interest rates were going to go up substantially, right? So when you look at that price per square foot, that is a fake, false, that wasn't a normal market. That was not an equilibrium price per square foot. Isn't that correct?
Correct. I mean, look, when interest rates were moving at such a rapid speed, that's not a normal market. You know, it's the same thing saying that the people, you know, living in their pajamas during COVID, that's a normal behavior. That's not normal behavior either. Right. We've had a lot of not normal behaviors in the last few years, and real estate has been a very visible outlet for that behavior that's out of the norm.
If you really just draw a line between the dot in 21 and 22, that's probably where home prices should have been. The other thing, too, it's interesting is, remember, everyone's talking about the year over year. Todd, I can't wait to talk about the year over year, 2022 to 23. And they got to a point where they didn't want to talk about it anymore, because if you look back a year ago, prices were less a year ago than today. They've been going up, and people, now they're back to peak to trough, talking about the peak, that artificial peak, which was artificial. Mm-hmm. It's not fair accounting of, and remember, interest rates back then were still under 5%. Mm-hmm. You could still get an under 5% loan in the spring of 22.
Mm-hmm. Yes.
So, okay, Oana, what does it look like going forward? What is prices maybe? Is this a sideways kind of yawning market until something interesting happens, like more inventory or interest rates dropping or something? I mean, interest rates dropping really doesn't move the needle, right? Because there's just not enough homes.
No. So look, you know, we said at the beginning of the year that 2023 was going to be kind of a push year, right? Whether it went up or down, it was going to be so nominal that it was going to be basically a flat year. And that's what it's turning out to be. 2024 is going to be an interesting year, partly because we will have had higher interest rates for a lot longer than a lot of people thought we would, and partly because it's an election year. And of course, we have so many international events that also play on people's fears and the way that people choose to live their lives. And what I mean by that is, you know, we tend to look at things that are external to us, and then we find ways to incorporate them into our life, whether it's to take that vacation or buy that house, or not buy that house or not take that vacation. We just tend to find ways to cope with these things. And so it'll be interesting to see how Americans choose to cope with what's going on in the world in 2024, because there's a lot going on for all of us to digest. I think overall 2024 is going to be, to a large extent, very similar to 2023. I think there's a possibility that the Fed will moderate rates starting with the second quarter. I don't see that in the first quarter. I think they would wait to do it until the second quarter, because I think that they're going to look at the fourth quarter of 2023, and regardless of which way we go, they're going to want confirmation in the first quarter of 2024 before they take action in the second quarter of 2024. And then, of course, like I said, we've got the election, and there's going to be some kind of horse trading there going on. So we'll see what happens. I just think that 2024 is going to be somewhat of of a similar year to 2023. I don't see a lot of activity unless the Fed takes aggressive action in 2024. I don't see that. I think the Fed's going to take moderate action. So you might see a few more transactions in 2024 than you did in 2023. That's normal. We've had record lows in 2023. So 2024 is bound to have more transactions than 2023.
Record low transactions.
Transactions, yes.
Home prices nationally are the highest they have ever been.
Right.
Nationally. National home prices are the highest they have ever been.
Right. So I don't see a whole lot of change in home prices. There wasn't a whole lot in 2023. I don't see a whole lot in 2024. But I do see the likelihood of more transactions in 2024 because of the pent-up demand and possible Fed moderation in 2024, second quarter maybe.
We just had the Federal Reserve came out and reported 4.9% GDP growth in the third quarter. It more than doubled the previous quarter of 2.1%. Even with that, the consensus is the Fed is not going to raise rates on the next week when they meet the Federal Open Market Committee. They're just going to maintain the federal funds rate. They're going to keep it
So
steady.
I think there's going to be a robust discussion about it, but I think in the end they're going to just stay the course. We saw that with the federal bank in Canada, and we saw the same thing with
Germany or France?
With England. With Great Britain. So Great Britain, they stayed the course. Canada, they stayed the course. So it makes sense that the U.S. would probably do the same thing. I don't see the U.S. kind of leading the charge in that direction right now. I think they're taking a wait-and-see attitude. And I think that's a healthy thing to do because, it takes a long time for the medicine to work in the economy. And I think the Fed is at a point where they're willing to be patient and see what happens.
What is interesting, I'm going to put this headline up here. We just did this video. New home sales soared last month as buyers swarmed the market before mortgage rates could rise even more. Now, what's interesting here, Oana, is that one of the reasons people have flooded into new homes is because there's not enough inventory. And somebody else had posted, but I heard there was 6 months of inventory in new homes. There's no such thing. New homes don't ever have inventory. If the new home is, the day the new home is completed, if it is not purchased, if it's not already under contract, then it goes right into the MLS. It's already counted in the MLS. Every new home shows up in the MLS.
Right. So, as far as that goes, builders have a lot of tools at their disposal, right? So one of the tools is interest rate. And we talked about this before. Pulte is giving people a great interest rate for 30 years. And they're using the tools at their disposal to incentivize buyers to consider new homes over resale homes. Buyers don't need a whole lot of incentives to entertain new homes because there are very few resale homes from which to choose.
Yep.
All right, so this was our market update for Vegas with a little bit of a sprinkle of the national. And let us know what you think in the comments. If you have an opinion, we welcome it so long as it's about real estate. So please keep your comments to real estate. We appreciate it. Remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.